going to be taking a look at how to properly identify horizontal support and resistance in the financial markets. This is going to be a great introductory video for all of you who are looking to use support and resistance in your trading. So, of course, like always, we're going to come out of the charts for a minute and look at conceptually what we want to see in the live markets before we actually tackle the chart. All right, so let's say we've got our support and resistance level right here. And what we're going to do first is talk about what you would expect to see at a support and resistance level. So here's our price feed down here, and we are approaching our support and resistance level. And since we are currently under the level, it is called what? Resistance. So we have approached our resistance level. What would we expect to happen? Well, we would expect the price will hold and be rejected back down, perhaps to a support level. So we will mark another level down here, and we will call this one our support. All right. So the first thing we've noted is that, let's just talk about this here. Price has rejected from this support and resistance level. So that's the first sign that we've got a support and resistance level. Price was rising, rising, and rising, and then we saw a peak in the market. Price fell very hard from this point. So now we're going to be watching price when it gets back up to this level. So price finds support, comes back up to our resistance. We would expect to see it fall again, right back down to our support. So we can now confirm that price is indeed being rejected from this level. Now, when it comes to support and resistance, we like to see a little bit of confluence here. So in this specific example, we now have two instances telling us that there is some kind of resistance here in the market. You need at least two instances to inform you that there is indeed potentially a significant resistance in the market that you can use to trade and make money on. Right now, in this example, for our support level, we have 1, 2, 3, and now we are waiting to see what happens here in instance number 4. But note this, guys, also on the support level in this example, it was previously resistance. So we have a second indicator here that this is a significant support and resistance level in the market. So resistance has turned into support. All right, that is another key identifier for support and resistance. Now let's say that at this point, price does indeed find support here. We come back up to our resistance, fall just a little bit, but then break through the level. Now, if we're trying to identify key characteristics about support and resistance, what would we expect at this point? We would expect that price will return to the previous support and resistance level and now find that that resistance has now turned into support, and we will rise again. So here we are. Other key telltale signs that this is indeed an important support and resistance level in the market. Now, when we discussed conceptually how support and resistance worked, we used an analogy of a bouncy ball in a hallway. And we talked about how the ceiling and the floor were much stronger than the ball, therefore the ball bounced back and forth. So the idea is that these support and resistance levels are very strong. So in order to break through a ceiling or a floor, there would have to be a lot of force. That ball would have to be very strong. It would have to be moving very fast. There would have to be a lot of momentum for that ball to bust through the floor or bust through the much stronger ceiling. So when we talk about support and resistance and being able to identify it in the market, what we'll typically see around these levels, a strong candlestick that represents a lot of momentum because it takes that to actually break through one of these levels. So we don't want to see small candlesticks slowly going through the level like this. We want to see one, maybe two strong candles busting straight through the level and then continuing on slowly. That's what we want to see, because what this right here tells us was that that was indeed a strong level in the market. It did take a lot of momentum to bust through that, and we can rely on that information to trade it in the future. So to summarize all of these concepts, we've got key support and resistance, or S&R, identifiers. All right, let's move this on over here. So the first key identifier that we talked about was bouncing. So you want to see that price is bouncing from a level, whether it be as support or as resistance. Either way, you need to see reactions. So bouncing / reactions from that level. The second key identifier for support and resistance is that you want to see that that support or that resistance becomes resistance or support. So you need to see that not only will a level act as support, not only will it act as resistance, it will act as both support and resistance. That tells you that that is a reliable S&R level. It's an important key barrier in the market. And the third thing that's a telltale sign for a significant support and resistance level is seeing strong price action, strong candlesticks, a lot of momentum required to break through the level. So momentum is the third key. Now, there are many other techniques that can be used to help identify significant support and resistance levels in the financial market. However, they are advanced and outside the scope of these lessons. They will be covered at a later time in the education platform. But for the focus of this video, the key identifiers are reactions and bouncing, support and resistance, and momentum. So now that we've got this conceptual basis and understanding, and we've taken notes on what we're going to be looking for, we can switch back over to the markets and identify how this really works. All right, so here we are on the Euro Pound 2-hour time frame, and our goal, our objective, is to learn how to identify support and resistance levels in the financial markets so that we can learn how to trade them and ultimately make money, put money in our pockets. So let's start at the top where we have our simplest example of a support and resistance level. Here we have a rejection. Here we have a rejection. Here we've got rejections, 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 and rejections. So let's place our support and resistance line, our horizontal support and resistance line, right up here. See here, I've got it labeled major support and resistance, major S&R. And we've seen how many rejections here? 1, 2, 3, 4, 5, 6, 7, 8, roughly 8 rejections. That's a lot of rejections, guys. That's a strong signal. So here with our key support and resistance identifiers, we can mark off number 1. We see plenty of bouncing, plenty of reactions from this level. Now, do we see that this level acts as both support and resistance? No, we don't see that. we actually do not see that. In the examples that we have here, in this market in front of us, we're only able to see that it is acting as what? Resistance. We don't actually see any instances of this acting as support because price held here indefinitely. Now, we may see at a later time that price breaks through this level and that this level then turns to support. But because we don't see that here, we can't use that to solidify and ensure ourselves that we do indeed have a significant support and resistance zone. So we're not able to identify number 2. What about number 3? Again, because we don't see price actually break through this at any point, we can't actually verify that it takes a lot of momentum to break through this level. We can assume so because it's been holding price so well, but again, we can't actually verify it. So even though this may appear to be a very strong level in the market, because you can't actually ensure yourself that it is a significant support and resistance because you don't have all of these identifiers marked off, you may want to hold back from trading it when price gets back up here because you don't know how it will react. You could very easily see price go right through this, and if you look to take a sell from here, you might lose. So let's take a look at another example here. Here I'm noticing that we had some peaks in the market right here. And then again over here. So let's see if we put a horizontal support and resistance line here, what happens. Okay, so we see some more information here. We reject again, 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 again. So same situation as above. There are a lot of rejections holding as resistance up here, which is of course nice to see. Let's just pull this all together and make it nice and clean here. And then let's note that we again have clearly resistance here. Now, again, we can mark off number 1 on our list because we're clearly bouncing, we're clearly reacting from this level. Now, the question is, can we mark off number 2? Does it also act as support when we breach? So here is our breach. Price breached right here. And if you notice, when price came back to this level, what happened? It found support each time. Not only that, not only did it find support each time, also over here, when we breached again, right here, it turned around and acted as resistance. So let's clone this. Let's bring this over here. Clone this again, bring it over here, and we have support. So for this specific support and resistance level right here, we are indeed able to mark off the second criteria. It does act as support and resistance. So did it take a lot of momentum to break through the level? If you zoom in over here and you take a look at this, you'll see that this candlestick right here, this candlestick was actually a pretty decently sized candlestick if you compare it to the other candlesticks around it. So let's zoom real in here. Let's zoom on in. Do you see the size of this candlestick compared to, say, this candlestick, or the candlestick next to it, or this candlestick, or this candlestick, or any of these candlesticks right off in here even? Okay, this was relatively a large candlestick. What that tells us was that it took a strong candle, a lot of momentum, to break through this resistance up here. Okay, so we can indeed mark this off of our list. So let's zoom back out here. Zoom back out here. So boom, marked off, boom, marked off. And then number 3, momentum, we can mark off as well. So
video, I'm going to show you guys a method that's very helpful when identifying the general area of where your support and resistance zones should go. So here in front of me, we have a candlestick chart. You know, we have price displayed as candlesticks. Okay. Now, a real easy trick to get rid of some of this clutter and get a general idea of where we should be putting our support and resistance zones. If we go right up here, these two candlesticks, click this button, come down here and click line. And what this is going to do is display price as a solid fluent line. Now what the line shows is the closing price for this time frame. Every candle close, this line chart shows. And it gets rid of all the clutter, it gets rid of the wicks, and it makes everything very fluent. Now when doing this, it becomes much easier to identify these areas of support and resistance. So here on the line chart, I can very easily see that we have all these rejections here. I can tell that price has come up and has fallen. Price has reacted here. There's something here that keeps pushing price down. There's a level here, and it's very clear. It's a lot easier to see when it is in a line chart. But right here, we have our resistance. So with all these touches here, all these reactions here, we can take our line tool and we can place a line here. This lets me know that there is resistance, a support and resistance zone within this general area we have right here. Now, they are zones. It's going to get a little messy even on the line chart, but you can see it's very easy to tell where these areas are located. It's not precise, okay? We're going to get into the precise stuff in the next couple of videos, but this is a way to spot the general area where you should be looking to draw your support and resistance zones, okay? Now, moving forward, we have reactions here. Price is bouncing from this level. We have a level here that is acting as support all through here. So let's label this support. This is our area of support, and it becomes much easier to see, much more clear on this line chart. Now we can come through, take our line tool, and we'll try and line this stuff up as best we can. Now to get the right area, we want to look around at everything. There's some slippage here. It's not going to be precise. You know, we're gonna really perfect these in the up and coming videos and make sure everyone knows how to be very specific when drawing their support and resistance zones, okay? But if we look over here, we can also tell that this support here, this support and resistance zone also has reactions on it from a resistance standpoint. If we look over here, we can tell that this support we have drawn along here has also acted as resistance. Okay, this is just more confluence that we have the right area marked here. We have another resistance. Now, following our support and resistance line, the bottom one here, we can also see that it held as support yet again, right here in this area. So again, we have this support and resistance zone acting as support here. This is what we're looking at. This is what we want to see. Our top resistance line up here also acts as a support over here in these areas. We can see support here, here, right here. And that's what we want to see. We want to see reactions on both sides of these levels. And it's clear that we do have that here. Now, what we're going to do is we're going to flip back to the candlestick chart and take a look. All right. In this video today, we're going to be talking about support and resistance, of course, but we're going to be talking about the correct way to draw your support and resistance areas. And there's only one single way to draw them if you wish to utilize them in your arsenal when taming the financial markets and becoming a profitable trader. The big secret is that your support and resistance areas must be drawn as zones. No ifs, ands, or buts. They have to be drawn as zones. That is the only way that they work consistently. Up until this point, we showed you guys the concept of support and resistance using solid lines. Now, price does not respect such a specific point within the market. Price fluctuates all the time, and there's not going to be a set specific point that the market respects every time. There's a general area, and we have to find that area, fine-tune it, find the very specific parameters of this area so that it can be used consistently and profitably. Now, in the previous videos, we were using support and resistance as lines just to demonstrate the concepts of it. But here, I'm going to show you how that fails. I'm drawing out this example right now, and we're just going to take a look at how this played out. Now, if we want to put a resistance here, here are our reaction points to a resistance. Okay, we can tell by these reaction points that there's a resistance in this area. Okay, now if we take the line tool and we use this middle peak here, because it's in the middle and it's just right there in between both of them, so that should work. If we just use this to label where our support and resistance area is at, this will fail. What will happen is price will come through, break this support and resistance area that we have from here, and retest it. And we're going to talk more about this when we talk entries. It's going to retest. You're going to enter for a sell, and you're going to lose. You're going to lose money. 7 out of 10 times you will lose money on a support and resistance line. Now, these are meant to be drawn as zones. Okay, so to avoid things like this getting faked out by the market, to avoid this, you have to draw your support and resistances as zones. So if we're looking at these peaks here, if we're looking at these peaks and we want to draw our resistance zone, we're going to start at the very edge of where this reaction originated from. So I'll move this so you guys can see clearly. When drawing the support and resistance zones, let's look at this one for instance, this area right here. We need to figure out what caused this reaction in the market. At what point within the market caused this bearish reaction? And we need the very beginning of that move. We need the very edge. Okay, so if we're looking for the very edge of this move here, I'll pull out this line, this dotted line tool. It is right here. This is our bottom parameter for our zone, and it is the very edge of this move. Okay, guys, right here. Now, for the next reaction, okay, we need to find the other side of our zone. We need to find the top portion of our parameters here. So let's grab our dotted line and let's check this. Okay, this is where this move originated from. This move, this bearish move, originated from this point where my dotted line is. Now, if we look to the right at this peak here, we need to figure out where this move originated from. Now this move originated from a place that was just a bit higher than what we had from the peak to the left. So we're going to move our boundary line up right to the edge of where this bearish move began. And this is how we get our parameters for these zones. Okay, so if I get rid of this, if we pay no attention to this one right now, when looking at these three bearish reactions and searching for this resistance zone, you have to make sure that you have the bottom boundary and the top boundary. So when we do this, we have all three reactions in our zone. All of them are accounted for. Now this one just happens to be within our zone. And that's great. That's exactly where we wanted it to be. We want these reactions to be accounted for. So we have our bottom boundary, we have our top boundary. Now I'll move this line over here so you can see how we get it. And this becomes our support and resistance zone. Okay, now what that is going to look like now, instead, if y'all remember, we had a line through here that didn't work so well for us. Okay, that was when using the line. When using this zone and accounting for these reactions, this becomes our zone. And now that we have it drawn like this, and we're not using this line anymore, this move made sense. This makes perfect sense. This whole move down to the support and resistance zone, and then the reaction off of it, this bounce makes perfect sense now. We weren't trying to sell this anymore. We were trying to buy it, and we made money. You know, this is how support and resistance zones work. This is specifically how you draw them. Now we're going to dive into the chart, and I'm going to show y'all exactly how to do this whole process within a real chart. All right, guys, so here we are, and we're going to walk through drawing this resistance area correctly and very precisely, okay? So we have an area where we see these bearish moves come into play here. So I know that there's a resistance up here, but I need to find it. I need to figure out how exactly I'm going to draw my zone, and I need to figure out where these moves originate from. Okay, where do these bearish moves originate from? Now, over here to the left, we have to find our resistance zone. Where is our zone exactly? We have to start with what the market is giving us, and we have to look at where exactly these moves are originating from, these bearish moves. So if we come in here, and we zoom in a bit, this move, where does this move originate from? What is the highest point that price went before it kicked in to this bearish move? And that point is this wick right here. This wick is going to be where this bearish move originated from. Where did this move originate from? Here's our bullish move. How high did it get before price went bearish? It's right here. These are our points within the market. These are what we want to take note of. These zones are very specific, and this is how they need to be drawn. I'm walking you through very slowly how to do this so y'all understand exactly how to do it. Before long, you guys will be so fast at marking these up. This is where this move, this bearish move, originated from, right here. Now this move, where did this move originate from? Right there at the wick. We had a small bullish move, wicked up, went bearish. These are our points that we need within our zone. Okay, so if we take a second and we just very precisely mark the edges of these moves here, we just mark them. We're going to get rid of these boxes so you guys can see clearer, and we're going to get rid of the arrows now. All of these reaction points need to be in this zone. Okay, so what this means is we need to find our lowest reaction point, which is this line down here where this wick is, and we need to draw our zone to the highest reaction point to find that top zone boundary. And this is our zone with all of our reaction points included. No one's left out. It's very solid. And all the moves make total sense. This is our resistance zone. We're going to do the same thing to our support down here. There is a support, so let's mark that up. So for support, we need to figure out where are the bullish moves originating from? Where does this move come from? Where does it start? Where does it originate from? Where does this push originate from? We're going to find the parameters of our zone looking for where the market is creating these bullish moves. So what are we going to do? We're going to come in and we're going to figure out exactly where did these moves start. What was the furthest point price went before it reversed and went bullish? It's going to be the wick edge of this little green candle here. Right here. This is very specific. Okay, guys, I told you this would be very specific. Where did this move originate from? The furthest point is the edge of that candle, the wick. We're going to use the wick on that one. Where did this move originate from? The green wick, just before the move. Right here. This is where our parameters are going to be set, and we're going to make sure that they are all included within our zone. All right, so let's come in. We're going to take this dotted line tool, and we're going to mark the very edge of this move. Boom, right here. We're going to mark the very edge of this move. It's a little higher. Right here. And then we're going to mark the very edge of where this move originated. And now what we need to do is include all of these lines within our zone. So if I take my bottom line, my furthest parameter to the downside, and drag it to the top line, that's going to be the zone that we use. Now I'm going to clear some of this off so you guys can have a better look at what's going on. This area right here is our support zone. Now I was really zoomed in. I wanted you guys to have a complete understanding of how this is done correctly. All right. This is our support zone. And look how how price reacted to it. Support then turned to resistance in this area. Zone was very well respected. This is how you draw your support and your resistance zones. This is how specific you need to be. Guys, practice this. Practice this. Find out where these reactions are originating from and develop your zone. Do not be lazy when drawing your support and your resistance zones. That took quite a bit of time to do that, but I wanted to make sure you guys fully understand the correct way and the only way to do this if you want to make money using support and resistance zones. Practice this on your charts until you are comfortable. You should be able to mark these up in a matter of 2 seconds. Okay, I can mark these up so fast it's not even a question. I want you guys to be better at it than I am. All right, so practice makes perfect. Get in your charts. Take the knowledge we are teaching you and apply it. If you're not applying it, you're not going to make money. I hope y'all enjoyed this video. I hope this provided an in-depth understanding of how to draw your support and resistance zones.